So will we go higher from here, or is there more downside coming? Let's talk about it. About a week ago on October 16th, I said this is encouraging that maybe we'll see some positive price action this coming week. Hopefully I won't end up with egg on my face. And you can see since that time, the market has moved higher, 4.66% higher to be exact. Ideally, to feel comfortable that we've seen the bottom, you want several things to happen. The first one is you want the riskier stocks to go up faster than the safer stocks. When I mean safer stocks, I'm talking about the Dow Jones Industrial Average, DIA is the ETF, or the S&P 500 SPY. I also want to see a bottom confirmation from our metrics, and I'll show you that in a little bit and where we're headed with that. And in our stock rankings, I'd like to see the NASDAQ 100 or QQQ and the small cap stocks, IWM, ranked higher than the Dow Jones Industrial Average and S&P 500. And then finally, I'd like to see cash ranked somewhere between 5 and 10. The lower the ranking, in other words 10, would be better. If cash is ranked 10, then it shows us that we have not only a healthy equity market, but we have a healthy treasury market as well. So let's take a look at that first bullet point. We'd like to see the riskier stocks go up further, faster, and earlier. And what are we looking at here? Well, what I've done here is I've plotted all of those stocks I mentioned, including ARK, which I didn't mention because it's even more risky than the Qs and IWM. And what I've done is I've plotted their growth since their most recent bottom. Now, if this were a very healthy bottom here, ARK would have bottomed out first, and meaning the red line would be going over here somewhere and would be much higher than it is. But what you can see has happened here is IWM, small caps, actually started out early in the cycle, rallying, but then kind of fizzled out here. The Dow was sort of next in line, the green line here, and you can see that it's the best performer here of all of these. That doesn't give me a lot of confidence that we've seen the bottom. You can see the next one, the Qs, the yellow line, hasn't run up very much, and it didn't start early as you would like. And then finally, ARK was the last one to start rallying. Yes, it ran up higher than the Dow is right now, but then it fell back and has started up again. This to me looks like a very tentative bottom. It's not a solid, let's jump in, let's put all of our money in risk, and we're going higher. It doesn't feel that way. So one of the bullet points I mentioned was you'd like to see a bottom confirmation. Now, what does that really look like? Well, first of all, to have a bottom confirmation, you have to have a bottom forming indicator. And let's take a look at one right here. In fact, we have two of them here. We had a bottom forming indicator back here, back in August, late August into early September. You can see that this bottom forming indicator was at 100%, and the confidence level was at around 98%. So very, very high confidence level and a very high indication. We didn't get a bottom confirmation here where the blue line needs to go up near 100%. The confidence level was up, but the blue line never made it up to the point where it needs to make it. So what happened? The market kind of continued falling. We got another bottom forming indicator here, again, a very strong one at 100%, very high confidence level. And then the market bottomed out here. And what started happening next is the bottom confirmation again started coming up with a very high confidence level. Well, the market really didn't go anywhere. As you can see, it faltered again. But what's interesting about this is we didn't get another bottom forming indicator. Yes, this went up to 100%, but you can see the confidence level was very low. In fact, back here, I said the markets are most likely going to go up this week. And what in fact happened? In fact, that was a down day. What happened? The market went up this last week. But what's happening now? Well, right now, we're within a day's strike of having a bottom confirmation. You can see that the blue line bottom confirmation is heading straight up toward 100%. And the confidence level, the dashed line, is also heading up toward 100%. Now, it doesn't mean we'll get there. I, right now, based on everything I'm seeing, give this about a 50-50 shot. What else do we like to see to show that we've maybe seen the bottom? Well, here's a healthy stock market back on August 17th. And if you've watched my previous videos, you've seen this table many, many times. So in this healthy market, the small caps were ranked number 1, the NASDAQ 100 ranked number 2, SPY number 3, Dow Jones Industrial Average number 4. This is really great. Cash number 5. So we still had an unhealthy treasury market here, but we had a healthy stock market here. And then what happened by September 30th? Well, cash and T-bills, short-term treasuries, were ranked 1 and 2, and gold was ranked number 3. This is really not a healthy stock market because you have safety ranked 1, 2, and 3, and you can see that the stocks are all here at the bottom. In fact, the NASDAQ 100 is ranked dead last. But what I thought was interesting at that time is that the small caps, IWM, were ranked higher than the Dow or the S&P 500. And you can see that in that previous chart where it started to go up sooner than any of the other equity sectors. Now, on October 14th, when I said the market is likely to go up next week, you can see that cash and treasury bills were ranked 1 and 2, but the Dow Jones Industrial Average was starting to float up here, along with small caps, the S&P 500, and the NASDAQ 100. Finally, this last Friday, you can see the Dow is ranked number 1, S&P 500 number 2, small caps number 3, the NASDAQ 100 number 4, and cash is at number 5, and you can see that treasuries are still not healthy. This tells me, yes, we're having a rally here, but until I see the small caps and the NASDAQ 100 up here at 1 and 2, I'm not convinced. So let's look at this a little bit differently here. Let's take a look at the buying and selling pressure for each one of these and see how those situations look. First of all, let's look at the Dow Jones Industrial Average since it's ranked number 1. You can see that it fell for quite a while here, and then it bottomed, and then it started to tentatively go up, and then it started to rally more. And you can see that the selling pressure was above the buying pressure. The selling pressure is the orange line, buying pressure is the gray line. But you can see since back here, the selling pressure has been dropping and the buying pressure has been going up. In fact, the buying pressure is now above the selling pressure. How about the S&P 500? Similar, but a little bit worse. So went down. Instead of going up, it went sideways, and then it started going up. Again, worse in terms of buying and selling pressure. Selling pressure is declining, but it just recently fell below the buying pressure. So not quite as good as the Dow Jones Industrial Average. Again, the Dow Jones Industrial Average stocks are considered way safer than, call it the NASDAQ, ARKK, or small caps. So investors are being very tentative. They're going into equities, but they're going into, quote, safe equities. And that's not very convincing. Let's take a look at the NASDAQ 100. Again, like SPY, it went down, but instead of going sideways even, it continued lower, and then it started to rally. And you can see that the selling pressure has been declining, the buying pressure has been increasing, but just recently, the buying pressure went above the selling pressure. This is not really convincing. And what about the ARK Innovation ETF, ARKK? Now, this is a very high-risk, innovative ETF. So it's even higher risk than the small caps and the NASDAQ 100, unless, of course, you're talking to Cathie Wood. But look at this. There was no yellow line here. It just kept dropping, finally bottomed out here, started to rally not too long ago. And you can see that the selling pressure has been well above the buying pressure, and they're just starting to cross now. So I'm not convinced we're going to have a rip-roaring rally from here. Now, it could happen. Maybe this is happening differently, and people will finally feel comfortable and start piling into ARK and the small caps and the NASDAQ 100, but I haven't seen it so far. It's not a typical bottom where the risky stocks tend to go up first. Let's take a look at treasuries. As I mentioned before, they don't look very healthy. We're looking at intermediate treasuries, 3 to 7 year treasuries. And you can see the price has just been dropping here. Now, it tried to go up this past Friday, but you can see that the selling pressure in general has been above the buying pressure over almost this entire period. Now, it looks like they're trying to cross here. We'll see how this goes. What about, let's go a little bit longer. These are sort of what I'd call intermediate to long treasuries. You can see, again, the price has been dropping, selling pressure above the buying pressure for the most part. Not even, not really crossing here, but looks like it could. Finally, TLT, the long bond, 20-year treasury bonds. Again, price just getting wrecked here, and selling pressure shooting up well above the buying pressure. This is not a good look. Now, this could be a case of the market catching up with the Fed. The Fed has been raising rates at the short end, which is where they control things. And the market has been basically not totally agreeing with them. So that's why we have an inverted yield curve. The yield on 2-year notes is much higher than the yield on 10 and 20 and 30-year bonds. But recently, the yields on the longer bonds have been shooting up fairly dramatically, and you can see that here. Well, what about gold? If inflation or other global risks were looking imminent, you would think gold would be rallying like crazy, and you can see it tried back here, but it's been falling except for last Friday or so. And the selling pressure is still well above the buying pressure, and in fact has been increasing if you look at the 1-month trend here, while the buying pressure has been decreasing. It doesn't look like gold's going anywhere. Now, it could turn around, but right now I don't think so. And then let's look at cryptocurrencies. Now, cryptocurrencies are not a digital gold. They're pure and simple a risk asset. They're a technology right now. Now, in the future, that may change once they're more mainstream and regulated or whatever they need to do to get off the ground. But you can see that cryptocurrencies have not been in a good place, except that they've been kind of going sideways for quite a while here, since the middle of September. And the selling pressure has been above the buying pressure, but recently, back about a week ago, the buying pressure crossed above the selling pressure. So maybe this is an indication that people are starting to go risk on, which would be good for equities. So look, it feels like we're trying to get a bottom here in the equity markets, but I don't like what I see. Typically in an equity market bottom, the more risky equities start going up first and they go up faster. That's not happening here. Maybe this one will play out differently than bottoms I've seen in the past, but we'll just have to wait and see. There's no crystal ball here. I'm Calvin Rose, and thank you for watching today. If you like this video, please hit the like, subscribe, and notification bell so you won't miss another upcoming episode of Invest Smarter. That's all for now. Hey, thank you for watching. If you enjoy these videos, there's several ways on Patreon for you to support the channel and access exclusive content, including special posts on the markets, educational materials about how to select investments and manage your portfolio. And at the investor level, you'll have full access to our natural selection stock rankings so you can evaluate individual stocks or market sectors that fit your investment style. Check out the link at the pinned comments below, and thank you for your support.